so long from here. But before that, let's just address some earnings. And you have Bajaj Electricals, Anant Bajaj, who's the Joint Managing Director of Bajaj Electricals, joins us on the show right now. Mr. Bajaj, thanks very much for speaking with us. It's been a rather disappointing quarter. Other expenses have eaten into the profitability as margins have come off. What's the sense there? I mean, what would you attribute this fall to, and what's the outlook for the future?
Well, thank you for inviting me here. Clearly our year has been disappointing, especially from our engineering projects department, which basically is the EPC contracts, where we had throughout the year, in fact, if you see quarter on quarter also, we've been clearly taking strategic write-offs and basically cleaning up, if you may call it, to really sort out all the delays and other aspects related to the expenses of overruns. And frankly, that's what has impacted the overall sale of the company and overall even the profitability. But going forward, very clearly, we do not envisage such one-time measurements which we had to take, because some of it was probably required to be taken faster, but we sort of said this is about time that we really take the corrective action, even if it may take a heavier hit on the company. But it's important that we really get the house in order, if we like to call it, and really make sure that we have a solid project management potential, deliver what really is possible by the company. Because this engineering projects department has delivered very well over the years. Certain parts, of course, we were new at, but that really had required special attention to sort it out. And now, but clearly our other two departments, that is our consumer durables and lighting, they have clearly given us good impetus, especially the consumer durables. And clearly the two other segments, which is consumer durables, lighting, have contributed correctly, and also have not had the similar issues like what comes in EPC business. And to that extent, I believe it has been a rough sort of time for taking this call. But then I think it was important that we take these tough measures to make sure the future becomes better.
Right.
And
Anand, excuse me for coming in here. Anand, so that would be my question. Let's just kind of make it short and sweet. We're running out of time. What do you do in the next year? Your margins have collapsed. Do you think there is an improvement in the first couple of quarters itself?
Well, we certainly are looking at, with the corrections which we've done over the last 5 to 6 quarters, we expect now that those issues will not linger any further. And we clearly are looking like coming back very strong in the coming 2 quarters. And clearly,
I mean, from 8% you've gone down to 1.18% this quarter. I'm guessing it's an aberration, yes. But what is very strong? Do you go back to 5, 6 or 7, 8%?
Well, that's something where it will be too early to say how much that improvement will be. But clearly, it will not be like what is it currently, and in the way things had to be done to make sure that everything is back to correctness, and that obviously took its own toll. We were trying to take all the measures in a relatively spread out manner, but I think it was important that we start the financial year correctly, and more importantly, this being our 75th year, which will come later in the year, we want to come back very strongly. And clearly from that standpoint also, it was important that we really bring back the good performance again.
Yep.
Because we have certainly disappointed for last 6 quarters as far as EPC business is concerned. But
I get that, Anand. But just wondering, because we're running out of time again, just one quick word really. I appreciate the fact that you're taking some measures out here. The other maybe a small concern, not as big as the margin picture, is that you missed your sales guidance too. I mean, 3,700 was at the start of the year. You've come in 3,400. So it's not as bad as the margin performance. What kind of top line growth can one see in FY14 from Bajaj Electricals?
Well, because again, as I said earlier, the EPC business is a major contributor also for the top line. And to that extent, the order book in the last financial year beginning was probably one of our worst ever. And to that extent, it affected also the possibility of how much you could actually bill. And from that point of view, we have a very healthy order book. We started the year with nearly 900 crores of order book. Currently, we have over 1,000 crore of order book. So that clearly is giving us the impetus to really grow well. So we clearly are looking at least a 20% growth. And to that extent, we look at the top line, and especially in EPC business, directly creates a better situation because the cost obviously remains the same, and we have to basically complete projects on time, and things automatically come back in line because our appliance is already growing at a very good pace. So is the lighting, and those two segments are pretty stable in terms of how they can continue giving that same level of growth. And basically it's the EPC which has to come back, and now we have got a good order book at hand. In fact, some more are in the pipeline. So that certainly gives us the impetus to really move the correct direction, in which I believe we already are.
All right, Mr. Bajaj, we leave it at that. Thanks very much for joining us and giving us your perspective on your business. All the best for the future. We'll take a break right now. The market is holding up about 1%.